Hey folks, David Frost, MyStrategicForecast.com. You're here for another episode of Common Sense Market Analysis on Wednesday, November 19, 2014. Okay, so you're looking at a 10-minute chart of the SPY right now, and the reason I want to show you that is because the only thing really relevant today is the intraday action, and you basically had an opening sell going on, and then you hit a low around, 11 o'clock in the morning, and then the market floated up into the Fed announcement, and then it tried to sell off again and bounce back at the end of the day. And we've read this book before. We've seen this before. The market's resilient. There's just no selling pressure out there. There basically are no sellers out there. And when there's no sellers out there, the market can't go down. You're going to need a catalyst, or you're going to need some selling pressure is basically the bottom line. Let's go over to a daily chart real quick, and I'll show you what that looks like from the longer term picture. So, the market's basically just floating around still. And, I'm getting a lot of emails from subscribers saying, hey, where are the trade alerts, where are the long plays and all that stuff? And I got to tell you, folks, I'm not buying anything here because the market has to pull back. It's just the way it is. It's not going to go up in a straight line. And here's where we are right now. It feels like it's going to go up in a straight line. Everybody says the market can't go down again. Earnings are great and the economy's great. And this is the best house in a bad neighborhood, the U.S. markets and all that stuff. We've read that book before. The market will pull back. It doesn't go up forever. It doesn't go up in a straight line. And we still have a couple of tells out there. So basically, if you look at this is the IWM, talking and typing, talking and typing. Isn't it amazing? Every single night. Can't do it. Okay. So while the S&P was basically flat today, the S&P was down 3 points, but that's a rounding error, right? It's just basically flat. The Dow is down 2 points. That's flat. That's not up or down. That's just flat. So, but the IWM, or the Russell Index, okay, the IWM was, let me get the number here. Bear with me. I'm on my other platform. Over 1%, 1.06%. Now, that's a pretty good sell, right? So if you look at the 10-minute chart, which is the intraday chart of the IWM. Okay, here we are at the beginning of the day, and we just sold immediately, and we sold pretty good. Okay, we sold a big candle in the first candle of the day, sideways for 1, 2, 3, 4, 5, an hour, almost an hour, and then we sold off again, hit the low around 11 o'clock with the spiders, and then we bounced up again and then came back down. But a 1% move is a pretty good move for the day. And it still tells me that there is going to be some selling pressure, because what the IWM is, which similar to the NASDAQ, which was down not as much, it was down almost half a point today. But what that tells me is that the risk assets are being sold. Okay, so money's going into the big stuff. Or it's staying in the big stuff, but the small stuff is getting sold. The IWM is basically small business across America, and the triple Qs, or the NASDAQ market, is your tech, your high tech and other stuff that's risk assets, no dividends, just growth stocks. Okay, so those are being sold, but the S&P and the Dow are not being sold. Well, it'll catch up. Okay, it always does. We just don't know exactly what day or when, but it should catch up. Now, I figured that during options expiration week, specifically today, and I told you last night that today was your what do they call it? Wacky Wednesday. And it almost turned out to be Wacky Wednesday, or it's Whipsaw Wednesday. So we go down, we go up, and we did that, but just not enough. And then it recovered at the end of the day. So we'll see what tomorrow brings, but you can't buy anything up at these levels. It's just not a prudent investment. Sometimes, and I've said this many, many times, sometimes the best trade to take is no trade. Okay, we've tried a couple of shorts out there. I got a short out there that's hovering along the flat line. There's just nothing going on. It's a very tough market, and this happens from time to time. But I'm telling you, sometimes the no trade trade is the best trade, because if you keep your money in your pocket, you can't lose it. And we don't want to trade the market we hope it is or we think it should be. We trade the market that's in front of us, and right now in front of us is a market that's floating higher until it doesn't. Okay, we'll know it when we see it. We always do. But right now, there's nothing to do on the long side for sure until we see some kind of a pullback. Now, let's go to the SPY and just talk about where that pullback might be. I like to give you guys an idea of what I'm looking at. Okay, and as it stands now, nothing's really changed, but this 50-period moving average keeps moving up slightly. The 20-period moving average here moves up slightly, 50, 20. Okay, so my target for a pullback maximum right now is going to be about 197.5 to 198. That's it. Okay. All right, so that's my take on the market. Showed you the IWM, SPY. There's really nothing else to cover. Not much has changed. We had a Fed announcement today. You know, the market started to get a little volatile. The VIX was up a little bit, but nothing happened. At the end of the day, nothing happened. So that's where it is. Let's go over to the gold market because the gold market was interesting. So all of a sudden, you know, you wake up this morning and gold is down like $24, something like that. And the price of gold was down about, well, let's call it 175 or so. I'm sorry, 1175. And right now it's 1180. And in GLD terms, you know, look what happened. So you had a big sell-off today, and then it bounced back all the way right around the Fed announcement, and then it sold off again at the end of the day, about $15 in the price of gold futures. So where do I think gold is going? Well, since we put in if this is going to be a low, okay, and I'm not 100% sure it's a low, but it should be a low. And if this was a low, okay, let's just see if we can quickly draw in a Fibonacci retracement, all right? Oh, that's not a good one. Let's do that over. Sorry, folks. One more time. So we're going to draw in a fib retracement from the low to this high, okay? And while this is small, I get it, but there's a point I want to make. Oh, man. Sorry, guys. All right, so your 50% retracement from low to high, this recent high, okay, 50% retracement is at, let's call it 112.50. Okay, and the 618 is 111.81. So here's what we're going to do. We're going to call it 112 to 112.50 is going to be a target on the downside that I think, unless gold is watershed decline, this could be a buy area based on how it gets there. So let's say, for example, let me get rid of these lines. Okay, let's say, for example, that over the next few days, gold goes down a little bit, down a little bit, down a little bit, down a little bit, right into 112, okay? If it went down for about 5 or 6 days into 112, you know, chopped around, down into 112, it's going to be a buy. There's going to be a lot of support in here. You just saw the fib retracement, and if that's the case, then I think gold takes off to the upside, and then we could be off to the races. If we capture this 50-period moving average and close above it, we're going to be off to the races in gold for a while. So that's what I'm looking at in gold, but don't buy it yet. Don't short gold. That's stupid trade right now, but don't buy it yet until we see a definitive pattern to buy. All right, next. Oil. Here's the USO. Nothing changed in oil. Oil is still weak, okay? And the price of crude is about 74.5 right now. And I still think 72 is going to be a good downside target for the price of crude futures. I'm in the January crude futures contract. If anybody wants to look that up, it's CLF15. At least on my platform it is. And I don't have it on the platform you're seeing. I have it on another one. And that's going to translate to probably about $26.5, $27 in the USO. Okay, now, where's the upside in oil should it start to move higher? Okay, well, I did some calculations and I took some notes here, and here's what I have. Okay, it's pretty simple when you look at it. You know, from a bird's eye view, okay, the upside target, at least for now, unless we close above 129.25 on the USO contract, then I think there's lower prices ahead for the price of crude. And why do I say that? Well, you see this these couple of days here, this big red candle here, and then a couple of days. Okay, all the buyers that thought that this was going to be the low, okay, and they bought in here, they're going to be sellers. Okay, Also, right above that at 129.72, which is down moving. Okay, so another couple of days, this will be down at 129.60 and then 50. Okay, well, it's going to move a little slower than that. This is a 20-period moving average. That's going to provide a pretty good level of resistance in the price of oil as well. So your upside target, should we move up from here, is 129 to 129 and a quarter, and your downside target is going to be 72 in the price of gold futures, which is going to translate to about 27 to 27.50, let's call it, in the price of USO. And I think that's a low. If we get down to 72 or corresponding 27, 27 and a half, something like that in the USO, that's going to be a pretty good low. Don't worry about the numbers. I'll tell you when we get there, and I'm going to issue, if we see a good bottom put in, and if we see a turn signal, then I'll certainly issue some trade alerts in the energy complex. So that's about it for tonight, folks. I'm David Frost, MyStrategicForecast.com. I appreciate everybody tuning in for another episode of Common Sense Market Analysis.